Well, folks, LA here. This is weekly report doing on 18th or 17th. Last week saw the market move up. Continuation move, breaks out. Bitcoin up big. Really, the only thing that didn't go up was the dollar. We've seen that before where the dollar goes down, everything goes up. Kind of mixed performance still on mega caps. Next week, you got NVIDIA. But you can see the breadth, right, has really extended here. Other than biotech, real estate, discretionary, you've got fairly good broad gains, actually transports too, across almost all sectors. What once was narrow is pretty broad anymore. Got daily and weekly breakouts. That's really the news this week. Breakout down here, breakout there, and then a hold up here at the top. Now, this could come back to the retest regen immediately. You'd really like to see it extend. And the reason you want it to extend is you want this thing to hold. And so you don't, this is not a wide price spread bar, so you really would rather not see it come right back in immediately, but instead get you 1 or 2 bars up. And usually when you get a breakout on multiple time frames, you get 1 or 2 bars to be upside. And so I would think the extension is what you have to bet on, given the probabilities that we know. You got the NASDAQ that also has broken out, as well as the NDX, and so 3 out of the 4 now have broken out on multiple time frames, again suggesting higher prices to come. If we look at the internal strength here, it's a little early, but I just want to point this out. This line here, that's your bullish trends. You want to see it end up here somewhere. And so you've already got higher prices. What you want to see is you want to see the trends, the bullish trends, be greater than they were the last time you were at higher prices. And so, again, there's time for that. We'll just have to monitor it as we go. If we want to ask our question of, will these breakouts leg higher? Are we going to get another leg up like we saw back here? Well, the way you're going to get it, and the way we should look at it, is you want to see things that haven't made new highs in terms of sectors start making them. Here's the stocks. You got that big spike here. You got NVIDIA earnings this week. You want to see it at least get up here and test that high on higher volume, ideally, and eventually get over it. Moving to the other sectors that are important right now, communications, you want to see new highs. You want to see it on your industrials, which is almost there. You've already got it on financials, almost have it here on the technology. Potentially healthcare and discretionary, the ones that are going to struggle. Those all would be ideal if they go up and make new highs. Now, we got the dollar and rates in a range, and that certainly allows the market to work to the upside. Last week, a little worse than expected, even though it was, jawboned away with some revision type stuff. Better than expected on the Wednesday number. Powell, he came out and didn't really say anything new. Inflation higher than expected. Rates probably steady. But I think they're going to have to lower rates. Why? Because I think Europe is going to see rates go down because they've got the room to work with their HPCI, or I think it's HPCI, their inflation report. Weaker than expected here on retail sales. So, if you look at this, you kind of got stagflation going on, right? You kind of got a lower activity in terms of consumer spending, and you have higher inflation gradually. And that eventually leads to stagflation. It's not the end of the world, especially if it doesn't get bad like it did in the 70s. But it's kind of a problem that they've got to keep working through. I think the big news this week is going to be NVIDIA earnings. You got durable goods probably going to come in about as expected, maybe weaker. And you got Fed speakers all over the place, but I don't think they really matter at this point. Just a lot of job bonding. Bottom line here, last week we asked ourselves, could we get a restart? Could we push the daily charts to new highs as well as the weeklies? And that's what we did. Now the question is, can you keep it going? And I'd have to say probably we can, given those things I said just above, but also because you can see the speculative fever is there again, right? We can see it in Bitcoin as a good example, but it's really all the altcoins. It's not just Bitcoin. It's NFTs coming back. It's the meme stocks. people are speculating like crazy again, and speculation leads to higher prices. More money flows in, and as gains occur, right, the market moves higher. And so we're looking at, the conditions that allows this market to work higher. Just on a side note on Bitcoin, I'm surprised that it has been able to survive the government monetary attempts to kill it. I'm very happy that that's the case. I think it gives us the potential for a better monetary system over time. If we go here and look at the trends, this is something we should spend just a little bit of time on. So you've got we've talked about these before, right? August, September needs a reset on the weekly. Okay, so that says they're going to go to sideways or down, one of the two. They're up right now. That's okay. There's nothing wrong with that, but it says that you're going to have some weakness, and that weakness is probably going to last longer than it did this last time we saw it, which was 6 to 7 weeks. But if you look here at the dailies, now the dailies are starting to line up with the weeklies. Even though they show July, they could extend out to the end of July, which would put them almost in the same camp here as the weeklies. As a matter of fact, these would probably turn first anyway, and then the weeklies would follow. And so I think when we look at this, I think the July-August period, which is about 6 to 7 weeks out, is where you have your chance to make your money again. And so if you're not long and strong right now, you really should try and get that way, because I think this is that period where you're going to have a chance to make money for 6, 7 weeks. And then you're going to have a spell where it's going to be hard to make money again. And so I just want to point that out, because once we get there, you could easily see, let's just say that this thing turns end of August, so September. Well, you got November elections. That means you've got September, October, nothing, right? So that's another 6 weeks minimum, probably about 8 weeks before, you have a chance to do anything, in terms of markets. So actually 96 is probably 7 to 8 weeks. And so at a minimum, you got another couple months coming up where it's going to be a dry spell. So the idea is make your money while you can. Follow up on last week's note. Last week I talked about China and the fateful decision they made. They turned inward. Well, we've turned inward to a big degree, but not just us, the whole world has. Globalism has been expanding global trade for centuries. There were spells like in the early 1800s, the Smoot-Hawley Tariff Act in the 1930s. Those kinds of things, they kill trade, or at least they reduce it. They increase inflation. They're generally disruptive. Well, we started raising taxes during the Trump administration. We've continued to raise them. We just got the electric vehicle tax 100% this week on China. We got enriched uranium being banned from Russia, and a whole host of other things. We still have all these tariffs, never got pulled off. And so, the country, the U.S., has turned inward quite a bit. But it's not just us, it's everywhere, right? I mean, the world has been divided up into two camps now. You've kind of got the West, and you've got everybody else. And in the West, you can throw, the usual. You got the U.S., you got Canada, you got Europe, you got Australia, you got Japan, you got, South Korea, Israel. Those are all the main ones over here. And over here, you got the big ones of China and Russia. You got a lot of North Africa, or a lot of Africa coming into this now. You've got a lot of Central America and South America coming into it. And so, the world's being divided into two camps. And usually when that happens, there's a lot of friction that takes place. And that's concerning. It's extremely concerning, not just from a standpoint of economics and trading and so forth, but it's also concerning because of potential for war. And I end this with the idea that, that's a potential. I'm glad my children really aren't draft age anymore. Okay, last week, pretty quiet, just rode things, nice big gains. Didn't do anything, put some orders in, but haven't done anything. Still 87% invested, still looking to get longer. And if we finalize this with the weekly projections, last week pretty much hit them. Didn't quite get to the highs, but got pretty close. This week I didn't change the highs, left them the same. But I want you to notice here the projections. there's a lot of projections in their nested ABCD structures. And what I mean by that is when you get nested ABCD structures, you have this condition where, you know, short term, intermediate term, and long term all overlap. And when that happens, you have a higher tendency to actually hit projections. And if you look at these, you have that short, intermediate, long. And look at the numbers. You know, 53.5, 54.5, 55, almost 56, 76 and 75. So a long way to go if in fact we get another leg higher. So don't discount it. It's certainly possible. Maybe the election turns out to be a boon for the market. Who knows? But that's the situation that we see. And I expect this week we could get a little retrace, but they're going to try and grind this thing higher. That's it. Have a great one. Stay safe. Take care. See you next time.